What's up? How you guys doing? 11. My 11 standbys. It's been a few weeks. Thought I'd get on here. I've been kind of wanting to do one on Zendesk for the last week since the news came out on March 20th, I think, that Plan, ticker PLAN, was acquired by Thomas Bravo. That is the crux of what this discussion is going to be about. I have done a couple YouTubes on Zendesk, so I don't want to repeat myself too much, but a very brief history is that there's an activist involved in Zendesk, ticker ZEN, Jana, and Zendesk announced it was buying Momentive, ticker MNTV, in the fall of last year, and the market hated the deal, and both stocks went down. And you fast forward to February, and the deal was effectively dead because shareholders were going to vote it down. When we found out on the near the beginning of February that a consortium of 3 private equity firms had bid 127 to 133 to take Zendesk private, the board rejected the bid, and there was no news until they voted the Momentive deal down a few weeks later. And the last news was on March 1st, there was a Bloomberg article that said that they were lining up $5 billion in direct lending financing for a refreshed bid of Zendesk. Did not have a price in it, did not say the board or the company was open to a sale. It simply said that they were using direct lending and the amount was $5 billion. What happened since March 1st? So, what first happened was the market plummeted, and I used as an indication of kind of high growth Momo stocks. I use ARK. It's a fine. I think it's a fine comp to kind of that sentiment. And ARK went from 70 on March 1st. I believe it was 70. Let me pull this up. Yes. It was around 70, 67.50. Though the days prior to March 1st, the 1, 2, 3, 4, 5, 6, 7 days prior to March 1st, it was solidly below 70. It was like between 60 and 70. So I wouldn't read too much into it being 67 right now, 68. It's basically back to the price range it was on that March 1st article saying that they were looking to do a revamp bid. The other thing you had as an issue since March 1st was that the war got much worse, and a lot of lending and credit kind of shut down, and there weren't a lot of LBOs announced in the month of March. So again, concerned that you can't even raise the $5 billion if the credit markets are shut down. Well, all of this changed about 10 days ago when Thomas Bravo purchased Anaplan, I think is the name of the company. By the way, you should know I know nothing about SaaS or any of these businesses, literally nothing. I didn't even know Anaplan was a company until the day they got acquired. I do know about Zendesk because people have used Zendesk every day when you do chat and help online. But anyway, as far as like knowing about their business, know almost nothing. When Anaplan was acquired on March 20th, there are 2 things that are extremely bullish for Zendesk. Okay. The first one, they use direct lending, and they raised, I think, like $3 billion of the $10 billion purchase price through direct lending. So we had, and that was like right in the heart of the war and with the markets much lower than they are today. So we had a direct comp that the credit markets are open, specifically the direct lending credit markets. And there's no reason to believe that Zendesk P firms can't get access to the exact same kind of credit that Thomas Bravo got access to. That's by far the biggest data point of that takeout. The second data point is if you look at the valuation that Thomas Bravo paid, and you should note that they are, they are the preeminent blue chip technology investor of our time. So they basically underwrite 25, 30% IRRs when they acquire a company. And oh, by the way, if you see this on my head, it's because my kid, Leo, scratched me last night trying to play with me. That's not domestic violence or Maisie. So you can take when Thomas Bravo pays for something as a good indication of it having good value, since they're so well known and respected. Now, not every SaaS company is the same, right? Different end markets, different growth projections, different gross margins, all that stuff. But the beauty of this deal is if you look at the growth rates and you look at the margin structure of Zendesk, and Anaplan, they are very, very similar. And in fact, Zendesk is probably superior by 1 to 2 or 300 basis points, both in actual revenue growth and what they'll probably do in 2022. And the same thing on the gross margin side. What purchase price did they pay for Anaplan? Well, if you do the math on run rating Q4 revenue and do it on a revenue multiple, you get to over $200 a share on Zendesk. $200 a share. It's trading at $119. And a lot of that is because of a takeout premium. Because people think that there's a chance, a decent chance, that this consortium acquires them. The reason why I'm so bullish now is that your break price in Zendesk just went up dramatically, right? Before that deal, I was worried this would go back to the $90, $85 range because the market was much lower and you would have no M&A bid anymore. Now, given the fact that the preeminent technology investor in the world paid the equivalent of $200+ a share for Zendesk, for Anaplan, excuse me, it's very hard for me to see why this even goes down on a no deal outcome. In fact, my biggest concern with Zendesk right now is that the board's correct. And if the private equity consortium can't get their bid up to the 150+ range, then the board will say it's undervalued the company. And they now have a direct comp of what was just, a private market purchase in the middle of, market chaos. So there is a good chance no deal happens. But why do I think a deal will happen? So there's 9 members of the board on Zendesk, and 4 are up for re-election whenever they announce the annual meeting. And Jana is running a slate on those 4 to throw them out. If you're those 4 and you're going to lose your seats come up for re-election, I think you're almost certain to lose them, then it's much better for your resume to be the one that sells Zendesk than to be thrown out and then have the next guys do it. Most interestingly, there was a filing last week by Jana on March 28th, I believe, earlier this week. The filing says that Zendesk has not notified brokers yet on what the record date is for this year's annual meeting. Now, I did a little research on this, and it's impossible for you or me to know when a record date is notified on an annual meeting. We only get to find out when they put the proxy out, and it says the annual meeting will be May 20th for shareholders of record on March 20th. And when the proxy comes out, the record date's always in the past, right? Unless it's a preliminary proxy, but the annual meetings are always usually just definitive proxies. You can go back the last 3 years. They usually put out their proxies the first week of April. April 1st, April 4th, April 3rd, April 5th, whatever. And the meetings are usually in the second half of May. Jana says that they are weeks, a month late in declaring a record date for this meeting. The earliest, if they declared the record date today, would be, oh, so I missed an important part, I think. When you need to give brokers 20 business day notice to what the record date is. So if they declared it today, you would not be able to have the record date, basically for a month from now, which would be well over a month, if not longer than they've done it in the last 5 or 6 or 7 times they've had their annual meetings. Why would they be doing this? Okay, there's 2 different reasons, and it's hard to read into which one it is. So the first one could be they're near sale or they're near the end of a sales process, and there's no point of pushing this annual meeting if you're going to be doing a tender offer in the near future. The second point or possibility is that they're delaying. They're worried about Jana getting the seats, and they're delaying the annual meeting for as long as they can. I think the odds it's the second one are rather low, because at the end of the day, if you're trying to keep your 4 seats and you don't have a backup plan, aka a sale, all you're going to do is piss off shareholders, and you're more likely to get voted out when the annual meeting actually happens, right? They're not working for us by pushing out an annual meeting. I go back to that March 1st Bloomberg article, which had 5 authors on it. So I know it's true that they were lining up the $5 billion in financing. If you're that consortium, do you go back to the board of Zendesk with a refresh bid and line up $5 billion in financing if the board has not signaled an openness to a deal? And if you haven't gotten an indication about what that price range needs to be for them to get it done, are you just wasting your time? The private equity firms are not hostile, okay? They won't operate in a hostile manner. So they gain nothing from spending the money on lining up financing and going back to the board with a new bid, because they definitely were told something after they got rejected from 127 to 133. So what do I think happens? I think you could have a deal here any day. And I think you can have an article any day. There's been no articles. There were tons of articles the day of the 127 to 133 bid before the company acknowledged it. The company came out after the close that day and acknowledged it. Okay. It's been radio silent since March 1st. And that was just about lining up the financing. So I think the lack of information is a positive. And I'll tell you why. Jana is trying to agitate here and trying to get the board thrown out. And if they catch wind to being rejected again, another deal being rejected, the same way the first deal got rejected, got leaked to the whole press, it would happen again, because it only helps Jana and their proxy battle. And we've heard nothing. There's been no news. It's been a whole month since that March 1st article, and there's been nothing. I think it's more likely that they're near the end. There's been no record date set for the annual meeting. And we have this great comp with Anaplan that values Zendesk at $200 a share. And it's a win for everybody. It's a win for the board because they get out and look good with the sale. And shareholders are very happy with a 150, price point, which I think they could pay. And it's a real win for the private equity firms. If they pay 150 when Tomas Bravo just paid 200 for a comparable company, when this might even be superior, I mean, they're going to get a 25% discount. So your biggest risk is that. And by the way, there is another outcome here that, while I don't put it as my base case, I would say there's at least a 20% chance of it happening. You could have a CRM or a strategic come in and pay the 180 or 170 for this thing. It's a good business. There's not very many businesses with over $1 billion in sales growing at 30% a year still, right? There's real scale here. And I would think that if that was to happen, again, you'll get a leak in the near future, if they're even talking to a CRM or to another company. It's a big company. This is a big company with a lot of people involved. And yeah, I'm just really constructive on it. I have a huge position. It's all in, well, actually, I own Common now too. So I have like an 8% position in Common, but I have a huge options position. And I own April calls, mostly just calls, not even call spreads, just calls, 125, 130, 135s, and 140s. I really like April calls because this reminds me a lot of the MoneyGram situation, where as you get to near the OPEX, they are discounting they're aggressively decaying it. Yet I think we're kind of right on track from a timing perspective. Now you have to understand the reason why this is different than most pre-deal mergers event stocks is we do not know if this company is open to a sale, right? We just know there's a consortium that bid and that they are coming back with a revamp bid. But we, as of what we know it's in a semi-hostile manner. So that makes this much riskier than, say, a MoneyGram, where we had 2 articles and the second article said there were 3 bidders and the final bids were due, right? Kohl's is another example of something that's riskier than the typical pre-event deal, but not as risky as this per se, because with Kohl's, they're running a full process. The risk with Kohl's is that the company really doesn't want to sell themselves. And unless they get a full bid, they'll probably say no. I own Kohl's spreads too, but I'm much smaller in those than I am in Zendesk. The beauty here, I think, is that we have now valuation support and that the board is really kind of stuck and they need to do something here. And the private equity firms make out like a bandit buying this at 150. So I own April calls. I own May call spreads. I really like May call spreads. You can I put on 125, 135 May call spreads. The reason behind that is that even if you don't, first of all, you get 7 weeks instead of 3 weeks for a sale, of course. That's the main reason. But even if you don't get a sale, you get to see earnings. And these things are, volatile stocks. So you absolutely could have a $135 stock after May earnings. I would think that they set up expectations to beat, given they're in a proxy battle. And earnings are going to come out before the proxy vote. I also own my biggest slug of options is July, and it's mostly all call spreads. I have a lot of 1x2s on too, which is pretty dangerous here. I wouldn't do that anymore. I did that before I realized how cheap it is and how it could go for like $175, $180 a share if a strategic bought them. But I would do fine even at $175 a share. I didn't go too crazy with the 1x2s. So I wouldn't put that on here. And I even own some Octobers, but those are pretty expensive now. In October, it's obvious why I did that. That just gives you more time. If you believe in the thesis that they're going to get acquired or that the business is going to accelerate, then it gives you more time. This business, go back and look at 2021. They accelerated year over year revenue almost every quarter. Quarter 3 and quarter 4 were the same, like 32%. But they entered quarter 2021 at like mid-high 20s. Again, how many billion-dollar revenue businesses that are not only growing 30%, but are accelerating that growth? And they have a pretty clear business plan to get to whatever it is, the $3.5 billion in sales, up from the $1 billion they're doing now, 1.2, whatever they're doing now. What makes Zendesk interesting to me is in the past, I only get involved usually with shitty companies, and they are usually in a period of pain. And when they are selling themselves, it's in a period of weakness. It's from a position of weakness. So if they don't get sold, the break price is a disaster. So this is not normal for me to be in a company that is honestly in a position of strength. And, that makes it a little harder because they have to get the full price that they need. I think that's pretty much it for Zendesk. You understand your risks. They definitely might not get there on price. And you might have a board that's unwilling to sell it in general. But I don't think your risk is that the buyers want to walk. I was originally worried about that, but after the Anaplan comp, I think these guys would love to buy this at $150 a share. And I would think that the board would take $150 a share. They just wouldn't take 127 to 133. I think they can get to 150. And they could justify it based on that comp that Tomas Bravo just paid. Okay, that's that. A little bit on AXSM. Very interesting developments there. Obviously, they announced last week, or earlier this week, excuse me, that the deficiencies have been cured. There are no deficiencies outstanding anymore. And stock popped on that. Then they said they weren't in labeling discussions yet, and the stock plummeted. And now it's back up to where it was that day. They did a little deal. People don't understand how they were able to buy that asset for like $60 million. A lot of skepticism, how the hell they were able to pull that off. I think it seems like a good asset and it seems like it fit well with the other two that they should get approvals for. I think Axsome is extremely interesting, and we're very, very close to the event here. You're either going to get a CRL very soon, or you're going to be entering into label discussions very soon. And I think it's overwhelmingly likely that they're going to approve the drug. And I'll tell you why. And I've done a lot in Axsome, so I don't need to go back all through it again with you guys. But if they were going to CRL this for whatever that July letter was for, you do not issue the deficiency letter in October. You just CRL it, and then you highlight those issues in addition to whatever the other issues are that make the drug not approvable. You're months past your PDUFA. You don't give them a new letter with specific issues in it to rectify, to cure, if there's already issues outstanding that have made this a CRL. But I'll take it a step further. If they've now cured those deficiencies and the agency has alerted them to that they're cured, you don't even bother doing that. Once that's resolved, you just issue your complete response letter because the rest of it's already written, right? That was the only outstanding issue. So the only assumption you can make, if the agency has notified Axsome that there's no deficiencies outstanding and they haven't given them a complete response letter yet, is that they are doing one of two things. They are internally debating whether to approve or CRL, which again, I think they would have done back in October, or they're going to enter labeling discussions any day. I don't have a good answer about why the FDA is taking so long to give a response, except that it has been documented that this division is way behind. There was another drug in the same division that had an October PDUFA, and only this 2 weeks ago, the CEO on their conference call said they just entered labeling discussions. I'll repeat, October PDUFA, missed it, entered labeling discussions in March in the same division. So that's a great comp. They're clearly behind on their workload. I don't have a good answer about why since Monday, and we're now at Thursday, the FDA hasn't entered labeling discussions yet with them. I just don't. But I am confident that a complete response letter would have already been written. And everything that would have made this a rejection would have been cemented going back to July or August when they issued the July letter. I also go back to when they issued the October letter. This is such a weird situation. They said those issues did not preclude labeling. If something precluded labeling, up to that point, why bother saying that? You should still say that labeling needs to be precluded at this time. But then I'm confused because if those issues didn't preclude labeling, how come they didn't start labeling then? So is this risk-free? No, this is not risk-free. This definitely can get a CRL. I own in decent size April puts, mostly April 25s and some April 20s. They are extraordinarily cheap. You get protected from a CRL for the next 2 weeks. I can't for the life of me see how it would go past 2 weeks if they're going to CRL it. It just simply wouldn't take that long to dot the I's and cross the T's of finishing the review when the review's been done for months and all they have is this one issue. Those puts are not expensive. I have like, I don't know, 10, 15 basis points of my portfolio in them. You know, most of my money is in the calls and the call spreads in June. So we'll see. I can see why people are skeptical. There has never been a drug approved that's gotten these deficiency letters. I'm referring to the July one. You know, but you know, I specialize in this crap. Hairy biotech approvals. I have a pretty good track record this year. And I'm very big in this. I could probably lose 500 or 600 basis points if it CRLs. Oh, if it CRLs before April, I'd lose much less. But if we get to April, OpEx, and it hadn't CRL'd, and we haven't entered labeling discussions, man, your guess is as good as mine. But I think we'll get an 8K soon. I really do. Zen competitor Taildesk coming via IPO could provide valuation comps. I mean, as the market hasn't even opened up for IPOs, I don't think there's been an IPO in the last month. But yeah, that's true. I wonder how big of a IPO that would be. Magnachip, nothing new there since I last talked to you. I think there's a big seller out there. The volume has really dried up. It is of course very much underperformed the market the last 2 weeks since the gap up after the conference. Luckily, the rest of my portfolio has been doing great. And I hope all these event stocks like Zendesk and Axsome happen quick, and then I can buy more Magnachip. Does P money drying up imply no MX deal anytime soon? Praven, that's a great question. Absolutely not. It's first of all, P money's not drying up. So there's trillions of dollars out there for sponsors. It was credit that was drying up. And this is the Magnachip deal is a small deal and would not need a lot of debt. And I don't think there'd be any problem raising the 500 million or whatever they would need to fund the acquisition there. That doesn't concern me at all. You know, something like Zendesk would be a, $20 billion acquisition. You know, something huge. Maybe not 20, maybe 17. I forget. Hold on. Yeah, like 17, 18 billion. Additional thoughts on Cure. I still own Cure. It's mostly in combos. We're going to get their hemophilia data. Sorry, their Huntington's data the next 2 months. I think that's all upside. You know, it's not going to be any efficacy data there. It's all going to be safety. The market's ridden off that asset. You know, I don't know what we're going to learn there that would make the market constructive, but I think that's all upside. And the EU has accepted their filing for hemophilia. We should hear shortly the FDA accepting their filing here. We don't even know when they filed. And, you know, that sets off a catalyst there. Hundreds of millions of milestones when they get approved. So I still really like Cure. I think it's a wait and see kind of thing, like all the rest of biotech. But I love my combos on that. I think I told you, I'm like short 12 puts and I'm long 20, 25, and 20, 30 call spreads in June and January. I love my BSM. by Blackstone Mineral. Natural gas just goes higher and higher and higher. And Europe is going to be spending years trying to make up for Russian natural gas, no matter what happens with the war. The US is going to export billions and billions of dollars worth, and they're going to have to drill a lot more than they're drilling now. And you're just going to see volumes go up with natural gas, and you're going to see price go up with natural gas. And 75% or 73% of BSM is natural gas. So, that's my second biggest position. Though Zendesk is about the same size, a delta adjusted. Zendesk is huge. Anything else, guys? All right. I'll jump back on here. If we ever get any news, I could do a little victory lap. The Zendesk and the AXSM are the big ones for me. I'm waiting on. Every morning I wake up looking for news. With Zendesk, we'll probably get an article, good or bad, and it can come at any moment. That would be my guess there. With AXSM, it's going to be an 8K. If I think that would mean it's a CRL they just received. The way it would be a positive on AXSM is you get an 8K in the morning that says they've entered labeling discussions, because they told us that they will 8K it if they do enter labeling discussions. Any other ideas you're thinking about? No, I'm pretty invested. I mean, I had these huge positions, I don't. You don't think April calls it too early to play Zen? Punta, I have a large position across many different months. My April exposure is probably 100 basis points of my portfolio. So I'll lose 100 basis points if it goes to zero. Why I like it is that I think it offers me tremendous upside. And I think that if they were lining up the bids, financing on March 1st, you'd have it all wrapped up by the middle of April. Your two risks are that the company won't sell, or someone else comes in, like a strategic, and the process takes longer. But you'll get paid on that, hopefully, with a leak. But no, my whole position would not be April calls. I'd much rather be in May and July than April if I was going to build a core position around it. And I'm not sure I would do 125, 135s anymore. I'd probably do 130, 140s. Planning to let your AMP position get big if it goes crazy in the coming months. My AMPY position isn't that big anymore. I had to sell down over the months because of margin reasons. And what I've done is put on call spreads to make up for it. So my common position AMPY is only 3%. I have another, I think, like 150 basis points in July and October call spreads. The July are 250, 750, and the Octobers are 5, 750. I am not planning on selling that 3% AMPY position at any price. So that's where I am with AMPY. I still very much like that. And I'm upset that I had to sell it when I did sell it, but I made up a lot of money on call spreads. My April 255s are most certainly going to expire all in the money in 2 weeks. I'll try to find you, Yuri. Sometimes it's hard for me to find people on my pending page, but I'll look for you and I'll add you. Sure. Might take me a little bit to find you. I think the Mays Punta are probably the best way to play Zendesk, but if you play July, then if the board members get thrown out, you still have a chance for the new board to sell it, but it probably wouldn't work like that because the meeting's going to be pushed back now. The meeting might not be till June now because they are not to June because they haven't done a record date yet. So if the 4 guys get thrown out in June, the new guys won't control the board. They'll only have 4 of the 9 seats, and they'll probably want to take time to review everything. before they force a sale. So I think May gets you done. I think May gets you done. All right. Let's fucking go, guys. Let's get these two to work. And remember, none of this is investment advice. These things are extraordinarily risky. I mean, Axsome could go to $10 if it gets a CRL. And yeah. And I'm not at all saying that can't happen. Thoughts on PSTH? I've stopped talking about PSTH because it's trading at $19.87. And for the last many months, it's nothing to talk about. If a SPAC's trading below cash and it's going to expire in the next 6 months, it's just a dead vehicle. You can own it if you have margin. If you don't have margin, you have cash, you can put your money into it. I think he's going to have a very hard time finding a deal and finding a deal that people like. I think SPACs are dead. I think his ego is there to make a deal work. And I think it'll be hard to make it happen. My name is not Luke Pablo Salamanca. Who is Luke? My former dog? Jason Treat. That's hilarious. Jason. Okay. SHLX, I love it. But you're probably not gonna make a lot of money there anymore. My base case is, it gets sold for somewhere between $14.75 and $15. We get at least one more dividend, maybe two. I do not think anything there happens soon. IR told a friend of mine he thinks 3 to 6 months from the initial bid. We're now a little less than 2 months in. I think there's a ton of shareholders vocally prodding the independent directors to make sure that they do the right thing. But at the end of the day, it's a complete black box how they decide what to sell it for. There's no shareholder protections. But I have a big position there. And I'm very happy owning it. If I can make another buck here with 1 or 2 dividends and a bump, it was a huge score because I never took any sweat on it. I don't consider it very risky. All right. All right, everybody. I turned 43 this week, by the way. Happy birthday to me. All right. Thanks as always for coming out, guys and gals. Take care. Bye.